Hey guys, how's it going? This is Carlos from Vigilante. So I made a video a couple days ago about Bitcoin in a nutshell. I do want to apologize. It did take more than 5 minutes. It's probably like 15 or so. But I tried to explain Bitcoin a little bit, so hopefully you guys like that video. I'll try to make this video shorter. No promises though. Alright, so basically what I want to talk about today is a few things I've been looking at the news. Let's start with this guy right here, Joe Rogan. So 3 days ago, he made the announcement that, Spotify is going to pay him $100 million. All right, there's a $100 million contract for him to transfer his podcast to Spotify, which is a bit mind-blowing. But, something interesting to think about here is, the following three things. This is a guy who has built an empire that attracts 190 million downloads a month, and with only a microphone. He's not really doing much, all right? And his content is valuable, and people are liking it. And what's happening is, what he's doing is he's breaking all the rules of content. All right, so we have three things that are going on right now. His episodes are normally 2 hours or longer, and rather than doing it once a week or 2 episodes a week, he's doing them every day. And on top of that, some of the people that he brings in, can be controversial guests, like Alex Jones. And, these unorthodox decisions that Joe Rogan is taking, I think it's part of the reason why he attracts so many people. And then, what's funny is you have these blue chip, news companies that spend hundreds of millions of dollars just to try to acquire an audience of that size. And so, I was making some points in my notes today, and, CNN had 148 million digital viewers in January, and that was their biggest month ever. So you can see the magnitude of this, and I'm actually going to show it here. That's the S&P. Alright, so here's the Spotify chart, on TradingView. Since the announcement, we've seen a 22% increase or so in Spotify. So clearly it's being reflected. Now, why is that interesting? First of all, I love Spotify. I have my subscription. I listen to music on Spotify every single day. So I think this would, in my opinion, it could be a good investment. At least for me, I like Spotify. I believe in, their company. But I think this addition that they're doing is going to be a game changer, because this is going to transfer so many people from watching YouTube every day, watching Joe Rogan. All these 190 downloads that we're seeing here in YouTube are going to transfer, to Spotify. And Spotify is now going to be, doing video podcasts, which is good for Joe Rogan. I think that's a nice development that they're doing for Spotify. And, in a way, it's going to be the first true competitor to YouTube, which is currently owned by Google. And I think this is going to be, better, because for the past, a couple months, years, Google, YouTube, they have been censoring a lot of people, a lot of ideas, thoughts, and, the fact that, get rid of this. The fact that, Spotify is doing this, I think it's a game changer. So, and again, we're talking about $100 million. So, I think it's definitely interesting. It's something to keep an eye out. I actually haven't seen a single episode from this guy. But I think the way in which he's doing his business, clearly, there's demand for his content, and I think it's pretty valuable and pretty cool that Spotify is just transferring and changing a little bit of their business model and adding, Joe Rogan to their platform. Now, I did make a post today on my personal account talking about the unsustainable system that we currently live in. I've been doing some reading, some research, and even talking to certain people that are experts in these areas. And we currently live in a system where consumption, everyone consumes. And what happens is, currently we have 78% of Americans that live paycheck to paycheck. That already tells you there's something wrong there. All right, and now couple that with what's happening with the coronavirus, and people can't work. Now, when the unemployment runs out, then what? All right, we're going to go back to business. What's going to happen? First of all, with the guidelines that are currently happening, restaurants maybe are going to go at maybe 50% capacity. Disney's going to run at what, 60% capacity? I don't know. All these industries, all these companies are not even going to go back to the previous levels before the coronavirus. So I think that's definitely an issue, a concerning issue that we need to keep an eye out for, especially when making investments or just something to know. I think it's interesting, and back to the unsustainable system. We have, for example, I wrote these notes. You pay for college without a return on investment. That's a student loan bubble. You pay for a house that you can't afford, mortgage bubble. You buy cars that you can't afford, car loan bubble. Consume things that we don't need, credit bubble. And interestingly, I found today that 1.6 million U.S. home delinquencies surged in April. 15 million credit card accounts did not get paid in April. And on top of that, 3 million auto loans did not get paid in April. And so basically, unsustainable system equals unsustainable results. Unfortunately, this is exacerbated by what's happening with the coronavirus. I mean, it's unprecedented. We've never seen it before. And so I think that's part of the reason why we're seeing such bad things happen to people. And I think, on top of that, what's happening is, all right, so right now what we're seeing is a lot of small businesses are being hurt. I mean, I have friends, that I see on Facebook, and even personal friends, my girlfriends, doesn't matter. Any type of small business is being affected today right now, because we've gone from our normal revenue to 0%. That's unsustainable. All right, and restaurants, all these things that can only work at a certain percent capacity, that's not back to normal, are going to be hurting. And while the people that are unemployed are getting the 600 paycheck every week, what's happening to the employers? If the employers end up, going out of business after this whole thing's over, how are the people that were in unemployment getting this money and they're no longer receiving it now? How are they going to get back to work? And so it's something that we just need to think about. All right, I get that we need to take the precautions of safety, to diminish the effects of the coronavirus and to keep people safe. But in a way, at some point, we have to get back to work. Period. And I think the American people are responsible enough that they can make smart decisions to go back to work and in a safe way. It's just unsustainable what's happening today. And I get it. We did need to take some precautions, some strong measures, but at some point we've got to get back to it. So I think those are my thoughts on that. And then another thing I wanted to talk about. There's this book I'm reading, and I was going back to it, and I was reading a part where 1969 and 1970. I also made a post about this. There was a big crash in the stock market, and what happened is it removed this illusion that for investors, this illusion that existed for the previous 2 decades, that you could buy stocks at any time, at any price, and you could be assured of profit. And then if there was a decline, it would be recovered by, a new rally. And so, in a way, I see a resemblance in what's happening today. All right, so a lot of retail investors. Number one, I just read an article recently that I think like 800,000 new accounts in trading were created in these times. Number one, all right, good for you. You can invest all you want. I'm not a financial advisor whatsoever. I'm not an expert, but from what I know, especially in these times of uncertainty where we don't know what's going to happen, you need to be a little bit careful with where you put your money. Just trading, because what happened is back then in Wall Street, even the big hedge funds, Wall Street professionals, all these people that are around this field, lost so much money back then, and it kind of brought people back down to reality. And what's happening today, we were at an all-time high with the S&P. Let's look at it. Let me see here. Right here. All-time high S&P 500. Then we saw a 30% decline. And this rally that we've been seeing, okay, it makes a little bit of sense in terms of technicals because we were oversold. As you see, RSI at the very bottom down here, and then we saw a big surge in the S&P 500. But based on what? And so that's where I'm going to this. I think that this rally has been pricing in a strong recovery, a V-shaped recovery in the economy. But what's happening is we're getting a lot of negative economic data outlook that is simply not showing that this is going to be the recovery we expected. And I think there's a lot of speculators. Sure, some investors could be in there, but 2.4 million new unemployment claims were filed last week, and we just started reopening. And on top of that, I mean, we're going to get close to 25% unemployment. I mean, just like the Great Depression happened. And so to me, it's funny because every week that we added another 3 million unemployment, the stock market has rallied and Wall Street has celebrated. How does that make sense? I mean, to me, the stock market and the valuations that we're seeing are completely detached from reality. It's a lot of investors that, like we saw in the 1960s. All right, we're gonna buy at any given time. This is time. Boom, 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 boom. Okay, and so that's what's happening today. I think it's a little bit worrisome for me. Just my opinion, of course. But I think you just got to be careful trading out there, especially those people that just created their accounts. And I wanted to mention something. Let's see here. So, recent post I made again. So this is a stock market cap to GDP for the U.S. And it shows that we're at 153%. And so basically what happens is, this is a measure of the value of all stocks compared to GDP in the U.S. And you see here, these gray areas right here are recessions that happen after such high valuation, or after there was such a high ratio for stock market to GDP. And so right now we've hit all-time high. And so to me, I'm not going to buy stocks at these levels, period. I'm looking more for, more of a fire sale, I don't know. But to me it sounds a bit, wild to be buying stocks right here. People can do it. People can make money. I've actually heard of people recently that are trading the market and are making, thousands of dollars. So good for you. But what I'm saying is, take caution in investing at such high levels, and especially when so much. I mean, the data that we're seeing right now is not pointing to the Great Recovery. I mean, we're seeing Federal Reserve precedents, say that we might not get back to 2019 levels until 2021, 2022. So it's something to look at. Then we're looking over here at the U.S. stock market. It's more expensive than any time since the dot-com era. Shouldn't that ring any bells? I mean, we're looking at all these things. I mean, you're doomed to if you don't remember the past, you're doomed to repeat mistakes that have been done in the past. And right now, I mean, we're seeing it's 23 times more expensive, which puts it at its highest level since the dot-com. So these are things to look at. I think really markets are a bit detached from reality, fundamentals, earnings, and I think this pricing in the recovery is looking less promising, in my opinion. And a few examples. I mean, Uber was up 7% after the news that came out, which Uber was laying off 3,000 employees. Doesn't make sense to me. And I don't want to be thought of as a doomsayer. I'm just pointing out some interesting data points that I've been looking at. It just makes sense to me. Sure, we could go back into a bull run on this recovery, which all people that were unemployed are not going to get their jobs back, unfortunately. A bull run, I don't know. Hopefully everything gets back to normal. I really want it to get back to normal so people are not suffering. But I'm just pointing out some interesting points of view here. And one more thing I wanted to talk about is we are seeing currently the biggest drop in U.S. existing home sales in 10 years. However, the median price for these is at an all-time high. So while we are seeing a big drop in demand, we're still seeing the price increase. Now, why is this? It makes sense because if you look at the supply, at the inventory of the new houses that are coming, it's very low. The inventory is extremely low, which means there's a low supply. Now, if supply is lower than demand, then that explains why price is rising. And so, interesting thing I saw today. What else have I got? Yep, that's a little GIF or whatever it's called. Trying to figure out what's going on with the markets today. A bit crazy what's happening. So, just take caution in your investments, in what you're doing. I wanted to show you guys this too. With Spotify here, over the past, I don't even know, few months here, we've seen this rectangular movement here. And since the news, we broke off. So this is a pretty bullish indicator for Spotify. And we're basically going to get back to, maybe beat all-time high. And we're getting pretty close. And then, okay, so last thing I wanted to talk about here. So Bitcoin, all right? I talked about Bitcoin last time. So the halving, all right, which I explained a little bit last time. If you guys didn't get to it, essentially what happens is, basically what happens is the inflationary rate of Bitcoin gets cut in half. So less Bitcoins are being mined. Let's look at what's happening today with the Federal Reserve. Number one, $4 trillion deficit this year or so with the United States. All right. Then we're having trillions and trillions being injected into the system, printed by the Federal Reserve. And so we're seeing the monetary base increase. All right. And then next to this, we have Bitcoin, who is halving its inflationary rate. And so I find this amazing. Now, looking previously at other halvings, so far only 3 have happened. Last one was May 11th of this year. Looking at historicals, and this is the log scale. When the halving happened here, around the 28th of November in 2012, we saw the start of a bull run. And it continued for, a year or two. And then we saw what we are seeing, or what we saw the last 3 years. After that, bear market, there was a huge overvaluation. We have to get back down. The bear market was pretty nasty. It lasted maybe 3 years or so. And again, we hit the halving. What happens? Sideways movement, but because of this scarcity that we're seeing, and there was higher demand than there was supply, we see this price go up. We reached $20,000 Bitcoin, and if I'm honest, I bought somewhere around here, and there were some large gains, right? But what happens is, and again, it's what's happening today with the stock market. So this is from past experience. When it went back down here, the mania, the FOMO, the fear of missing out, was just absolutely insane. I mean, investors were buying right here, or speculators, let's say. And when it dropped, they were like, oh, that's a huge dip. We're going to go back to 30,000, whatever. Let's buy here. Okay. Went back down. Oh, dip. We got to buy. Up. Went back down. Oh, dip. Look at this. All right. And so that's what's happening. This comeback here, although not as similar as S&P 500, be careful. You buy here, we go down. No one knows how to time the market. I don't know. I have no idea. Wall Street experts have no idea. So you kind of want to, keep updated and just look at that risk reward that you have. And remember, the biggest enemy for an investor is yourself. So it's about character. It's not just about brains. And so, right now we're here. Now looking back at historicals, we see the having hits, and then we see a continuation and a start to a bull run. And so could happen. In these times of turmoil and crazy things going on, maybe this is the rocket launcher for Bitcoin. Maybe it's not. But we're seeing it in gold, and gold is going up. World's best boss, Dunder Mifflin. But anyway, I'll end the 20 minutes, not 5, sorry. I'll end the recording here. Hopefully you guys like the content. You know, leave a like or, you know, comments if you disagree with anything. If you agree with something, if you want to share it, do it. You know, I kind of want to see, and we kind of want to see how this is going. If you guys are enjoying the content, if you're not, I think this video is going to be better in terms of quality than the last one. So, yeah, just let us know what you guys think. Again, I'm enjoying doing this, so I'll try to keep the videos up and coming, and, you know, keep giving you guys updates and a little bit of our thoughts and what we're thinking about the markets and things that are happening. It's not all about Bitcoin, not all about the economy. You know, things like, you know, Joe Rogan with his $100 million, you know, contract. Pretty cool stuff. So we'll keep it up. And again, thank you guys. Appreciate you guys watching.